trading at its best.
Welcome everybody to the webinar today. Really quick, I'm Mike Swanson with TradeWest Forex. I've been teaching traders for a little over 5 years and been trading for about 10 years. So I've got a lot of things I can teach you guys. We've already had a lot of these lessons. We posted them on the blog, tradewestforex.com/blog, and so you can review the recordings. We do record all of these sessions, so that way you can go back and review them. And we shoot out an email when that's available, or you can just check periodically at the blog. So let's take a look at what today's lesson is going to be. Okay, market reversals. I decided to have a training webinar exclusively on market structure highs and lows. And I actually am going to teach you a modified version today of that. And I'm also going to explain why it works better than other patterns, other candlestick patterns and things that you're probably familiar with. And then we'll definitely go into examples on the charts. And then what I'll do is I'll hold the Q&A until I'm finished going through the training. And we usually record that separate and give a separate replay for that. So let's dive right in then. The modified market structure high or low. So what you need to do here is actually from left to right. Okay, so from left to right, you're actually going to analyze 3 bars. This is a 3-bar pattern. Okay, so from left to right, the first bar is going to need a lower high than the second bar. And both bars need to be bullish. This is the modified version right here, is that you want both bars to be bullish in a market structure high. Okay, and then this next condition is the third bar needs a lower high than the second bar. And this third bar needs to be bearish. Okay, just a bearish close, red bar on your chart, depending on your broker setup, your chart setup. So that's the basic rules. Now, confirmation is going to take place when you break the third bar's low. Okay, so that's the definition of a market structure high that's modified by requiring the first 2 bars to be bullish and the third bar to be bearish. Now, market structure low is the exact same, just flipped. So you'll need the first bar to be higher low than the second bar. Okay, so higher low than the second bar's low, both bars bearish. Okay, then you're going to want the third bar's high. It needs a higher low than the second bar. Okay, so you're comparing lows here. Third bar needs a higher low than the second bar's low. And you want that third bar to be bearish for market structure low. Okay, so 2 bullish bars and then a bearish. And then the confirmation of this one will be on the break of the third bar's high. Okay, that's a market structure low. And let me go ahead and just draw these here, and then we'll go to the charts. Okay, so basically market structure high is a 3-bar pattern that will look something like this. Okay, and these first 2 bars will end up closing bullish. Okay, so you could draw it like this if you're looking at a bar chart. And then this one again, bullish. And then this one here would be bearish. Okay, so this is a 3-bar pattern. We've got the high right there, higher high, lower high, and then the signal confirmations when you break that low. And that's where you go short on that next bar. Okay, now let me draw it for a market structure low. Okay, so here you're going to have the market making, lower low and then a higher low. And in this one, you're going to have bearish. So opened here, closed here. Okay, and then you're going to have another bearish. and then you're going to have bullish. Okay. When I go to the charts, we'll have candlesticks, and you'll see the colors. It'd be a little easier if you're not used to bar charts. But this one, all you needed was a low, lower low, higher low. Confirmation is when it breaks that bar, third bar's high. You'd go long on this candle when it breaks. Or you can use this as an exit. There's many ways of using this. It's simply showing you a market reversal. And by having the first two be bearish followed by a bullish, this is going, let me go ahead and show you why this works. Let's move on to the next slide here. Okay, so the reason this method works really well, and it works a lot better than most candlestick patterns, and I did some thorough tests on some of the popular candlestick patterns and found most of them only had a very slight edge. 52% win, 48 loss. It was not very much. And some of them actually were the opposite. They weren't working at all. They were doing the opposite of what you'd expect. Okay. Now, the reason this one works so well is it demonstrates exhaustion in the market. And this particular pattern I actually picked up from a guy that I met, another trader that I met at one of these trade shows, and he actually uses it in the stock market, and he's making over $1 million a year just trading this basic pattern. So I decided to see if I could adapt it to the Forex markets, and it's worked extremely well. I've taught a lot about it, and by applying this modified version I'm showing you today, can give you even more accuracy when you see these patterns. Okay, so like I say, it demonstrates exhaustion in the markets, and then what that basically means is there's a lack of strength after a strong run. So you'll get those, you'll get the two bars, bullish or bearish like we were showing you, and then all of a sudden the next bar flips colors, or it flips direction, and it failed to break a lower low or a higher low. So that tells us there's a shift in momentum. Okay, so so whenever the market's coming down really hard, okay, you've got those bearish candles coming down really hard, and then all of a sudden you get this bullish candle, and it failed to make a lower low, it changed direction. That's a shift in momentum where we'll go long over here on a market structure low. Okay, so let's move right into some chart examples, and this will help kind of tie it all together to what it'll look like when you're trading and looking at your charts. So let me go ahead and bring my charts over here. Okay. I'm just going to grab, it doesn't really matter. Let's just grab, say, the pound dollar. Okay, let's zoom in. Just going to clear off all my toolbars so you guys can see it full screen here. Okay, so I've got a pound dollar chart up here. We could go to the daily, we could go to the 1 hour, you go wherever you want. As you know, with the way I trade lately, I've just stuck to the daily charts, but this will work on any pair and time frame. Okay, so let's look at some of these example or these setups and show you where it finds market reversals. Okay, so I'm gonna demonstrate this. Oops, I'm going to turn off our auto scroll. I'm going to demonstrate this without the benefit of hindsight. I always suggest doing that with anything that any method that you're trying to learn, is turn off your auto scroll up here if you have MetaTrader, or turn it off at whatever platform you're using, and then you can pull the chart forward 1 bar at a time. On MetaTrader we can use the F12 key to do that. Okay, so that walks it 1 bar forward. Now what we're looking for here, if the market's coming down with bearish bars, we're going to look for market structure low to find the reversal to go long. So we're looking for 3 bars here. We're looking at the last 3 bars, including the current bar, and we're saying we're looking for a low, a lower low, and a higher low. That's all it needs to be. And we've got that right now, right? We've got the bearish. The first two bars are bearish. That's the modified version, is requiring the first two to be bearish. So that shows we've got a lot of momentum. But then all of a sudden we get this bullish shift. We've got a bullish candle telling us it failed to make a lower low and it's bullish. That's a good signal to go long, demonstrating a shift in momentum. So we would say, okay, I want to go long when it breaks this third bar's high, the current bar's high. Okay, so we could put a pending order in there if we weren't going to be there the next day. You know, if this is daily charts, that's going to be probably what you do. And then next day, let's walk it forward and see what happens here. Okay, this one did make a shift down. So now this depends on where your stops are at. It's not always going to work perfectly here. But the key is you can keep your stops tight. Okay, when you get a setup like this, the idea is it's supposed to move immediately in your favor. Now, I would have kept my stop really tight on this, probably even the low of the entry bar, slightly lower than that maybe, and I would have took a small loss. Okay, so then we would look for the next setup. Okay, here you've got a low, lower low, higher low. Okay, does everybody see that? You've got low, lower low, higher low, and then it needs to break that high right there. So let's see if it does it. Okay, it did it right there. So now you'd be in a trade long, or if you were short, you would have used that as an exit. So there's your signal right there to go long, and you get a nice run. Now you see over here, if we took a loss on this trade, on this setup, actually, you know what? We didn't take a loss on this one. I probably didn't explain that one very well. We didn't break the high here, so there was no entry. So this wouldn't even have been a loss. Okay, you only would have went long. I don't know why I didn't catch that. You only would have went long if it would have broke up here. So this showed you that's why it's good to wait for confirmation. But like I say, even if this did break up and ended up going down, if you would have lost, you needed to keep that loss and that stop loss tight. Because if that ended up being a loss somehow, if you got that trade and it would have broke higher, it would have been about a 60 pip loss on this daily chart. Where over here, when we get this winner, we're making much more than 60. We're making 1 to 2 or better on these setups. And look how far it runs. Just solid green bars all the way up. Okay. But anyway, that first one was not even a trade. So hopefully I didn't confuse you there. That market structure low pattern here did not break the confirmation high. So no signal. That's why it's important to wait. Okay, so now you've seen the next one, though. It was definitely a valid trade. You had a low, lower low, higher low. And now this one, however, was not the modified version, right? This one did not have the bearish, bearish, bullish pattern. Okay, that's, like I said, that's the modified version. That you don't have to have that in place. It's just when you do, it's usually a better signal. Okay, so this one was still valid. It just didn't have the modified criteria. Okay, so now let's see if we can. Let's just stick with the modified one so we can keep you guys from getting confused here. Okay, so let's walk forward and we're going to look for either 2 bullish and a bearish with our market structure high, or 2 bearish with a bullish with the market structure low. Okay, so there's 2 bearish, bullish. It would need to break this high up here on the next bar, and there it is. Okay, one little thing that I've kind of noticed with these, if you get a setup like this with a really strong bar, a lot of times, I mean, that's a lot of momentum. You will be catching them sometimes late, and you just need to be careful on those. It might mean your stop needs to be pretty big, to possibly, get through the potential drawdown on the next couple bars, or you might just want to skip those, or just be really conservative on the exit, because you can already see it's struggling. It's trying to decide which way to go. So you just want to be careful on those when you see a big bar, engulfs everything from the last couple bars. Okay, so this one worked out a little bit after that big run. It kind of, what did it do here? Another 50 pips or so, and then ended up consolidating. Okay. Let's see, then you got bullish, bullish. Let's see, there's your bearish candle. So you'd be looking for a break right there to go short, and it didn't do it. Okay, so then you've got bullish, bullish again. You're just waiting for a bearish candle, and you get it right there, but it's got a higher high than that last one, so that doesn't work. There's two bearish, lower lows, and you don't get the higher low there. It ends up going lower with the bullish, so that doesn't work. You can see how fast you can go through your charts and practice this. Let's see if we can find a couple more. Bullish, bullish, there's your bearish. So you would want it to break this low, and there it is. That gives you your signal to go short, and you get a nice little jump down. Okay, I mean that ran down 115 pips. If you kept your stop above the high of the entry signal bar, you would have had better than 1-to-1 available on that trade. Okay, there's a bearish, bearish, lower, lower, and that's where you're at right now. So if you're on the current bar trying to figure out what to do next, all you're looking for is a higher low bullish bar on the next day. Okay, does that seem pretty simple? Let's do one more example, and then we'll wrap it up and do some Q&A. Let me just go way back here. Let me go ahead. I'm just going to drop it down to an hourly chart just so you can see this working on any pair and time frame. Okay, so let's just look for, here's bullish, bullish, bearish. So you would wait for you could put a pending order in or wait for that low to break to go short. There's your signal to go short. Okay, it makes a run down of about 8 pips, but your stop would have only been 8 pips. So if you're even if you're just looking for 1-to-1, you're going to do really well with this because the win rate is better than 50%, and that's all you would need to be, slightly better than 50% with 1-to-1 to be profitable. Okay, or if you waited through that consolidation, it did make a bigger run of about 18 pips with your 8-pip stop. Okay, and let's see. So that is a method, Tony, for exiting, is just a basic risk-to-reward exit of, say, 1-to-1, and putting your stop above the third bar high for a short, just your entry or your signal bars high or low. Hey, here's a bearish, bearish, bullish, high or low. You're looking for a long entry right there if it breaks that high. Ends up going down, so you move on, no signal. Bearish, bearish, bullish again. And you don't have to use these counter trend. I have some other lessons you can go back and review where I've used the market sentiment indicator as additional confirmation, and you can stick with the trend that way as well. And you can download the tool, the Informer tool for that. So you've got bearish, bearish, bullish with the higher low, and it slightly breaks it and gives you the signal to go long right there. Okay, and so in this one, you put your stop below that third bar's low, the bullish candle. So your stop on this one was only 15 pips. If you're looking for 1-to-1, you got it right there. Okay. And let's see. Okay, bullish, bullish. There's your bearish candle at the end of this shift of momentum here. So you would enter short the break of this low, and you would put your stop above that high of this bar. There's your signal. If your stop's up here, that's 18, 19 pips, and you easily got the target of 1-to-1 if that's what your plan was. Okay, it goes the other direction now, and you had a bearish, bearish, bullish pattern. So you got your market structure low, confirmation right there to go long, stop loss 15 pips, easily got 1-to-1. So there you go. I mean, I've given you plenty of examples. It takes 3 seconds to find these. So just take some time walking your charts forward and doing exactly what I just did. And you might be able to find certain pairs and time frames that work best. You might be able to have your own little tweaks to it. Practice this also with the market sentiment indicator that's on our Informer tool. Okay, this will give you where the real stops and limit orders are at on the market. So I can see exactly where everybody's putting their stops and also where they're putting their targets and entry orders. And we have all kinds of trainings on this. So you just go ahead and go into the blog, TradeWestForex.com/blog. You can watch the trainings on those. You can download the tool. And actually, let me just give you the link. Let's give you the link to download it. It's just TradeWestForex.com/informer. That's where you can get our tool that has the market sentiment in it that you can use with this pattern. Okay, so I'm going to post that link here as well, and then we're going to move into the Q&A. And this tool is free, by the way. It's not something that expires or that's a trial. It's a 100% free tool that we just give to those that follow us and that come to our webinars and read their blog. We do have different features there that are in there, such as mirror trading my trades that are for our members, but most of what's in there right now is free. And we've got a lot more of cool stuff coming that I'll be teaching about over the next couple weeks. So there's the link, TradeWestForex.com/informer. Get that tool downloaded. It takes a few minutes to install, and you can play around with that with what I just taught you today.